On today's news roundup for this past week, there's a lot to discuss. Let's start with what Jamie Dimon just warned and why that's important to investors.
Partially because of rules and regulations, and you are going to see a crack in the bond market, okay? It is going to happen. And I tell this to my regulators, some of who are in this room, I'm telling you it's going to happen, and you're going to panic.
And he's not alone. BlackRock's Larry Fink sounds the alarm over rising U.S. deficit, and Citadel Securities Esposito says U.S. deficit is a ticking time bomb. So why does this matter to investors? A bond market breakdown could boost yield sharply, hurting both fixed income and growth stock valuations. Rising long-term rates may slow economic activity, affect mortgage rates, and reshape Fed policy expectations. If there's a widespread sell-off in treasuries, it could ripple through global markets. Remember that when Trump initially hit us with those tariffs, the stock market dropped like crazy and the bond market went crazy as well. The bigger issue of the two was actually the bond market, which was the reason why Trump actually put out the 90-day pause. I'll monitor this situation and keep you updated. Now in this video, I'm going to get into the feud between Trump and Elon Musk and the effect on the stock market. I'll give you the latest update on the news coming from the US and China trade talks and tariffs. I'll also give you all the important dates coming up in June because there's surely going to be stock market movement on some of these key dates. Also, the European Central Bank cut their interest rates, and that's a pretty big deal. So let's start there. On June 5th, the European Central Bank cut interest rates by 0.25%, lowering the deposit facility rate to 2%, in response to falling inflation in the Eurozone, now at 1.9%. Their president emphasized that the decision was nearly unanimous and warned about potential risks to Eurozone growth due to escalating global trade tensions, particularly from US tariffs. Now, Trump has been active on social media calling out our Fed and saying that we should be lowering rates just like Europe is doing. So why aren't we cutting those rates? Well, I made this chart so that you can see. As you can see, the inflation for Europe is below the target at 1.9%, and we are above the target at 2.5%. For Europe, their growth signals is showing that they're weaker, and so they need to cut down those rates, whereas we're showing a stronger, healthy employment environment. The current rate for Europe is at 2%, and they've cut 8 times in a year, whereas we are staying steady at 4.25 to 4.5%. The outlook for Europe is that they possibly have one more cut this year and then probably pause, whereas for the US, there's cuts expected around September, but we don't even know if that's gonna happen. Now let's talk about what's making the stock market go berserk. Like 2 or 3 days ago, it was down a bunch, then it was back up. As of Friday, it is up. Who knows what's gonna happen? The biggest factor, Trump versus Elon. Like seriously, what the heck is going on, people? This has been a crazy year. The conflict began when Musk publicly criticized Trump's One Big Beautiful Bill, a comprehensive tax and spending proposal. Musk labeled the bill a disgusting abomination, citing concerns over its fiscal irresponsibility and the removal of electric vehicle subsidies, which directly impact Tesla. In response, President Trump expressed disappointment in Musk and threatened to revoke federal contract with Musk's companies, including SpaceX. He suggested that Musk's opposition was driven by personal financial interests related to the loss of EV subsidies. Musk intensified the feud by endorsing calls for Trump's impeachment and suggesting Vice President J.D. Vance as a replacement. He also accused Trump of withholding documents related to Jeffrey Epstein, alleging a connection between the president and Epstein's files. The public spat had immediate financial consequences. Tesla's stock experienced a significant decline, dropping over 14% in a single day and erasing approximately $152 billion in market value. Investors expressed concerns over potential regulatory risks and the stability of federal contracts with Musk's companies. Since this feud is so public and both of these figures are so powerful, the entire market has been affected, and we're going to see what happens with this moving forward. But next is what's going on between US and China, and specifically trade talks and the tariffs. On Thursday, June 5th, 2025, Trump and the Chinese president held a 90-minute phone call to address escalating trade tensions between the two nations. The discussion focused on issues such as tariffs and the supply of rare earth minerals, which are vital for various industries. Following the call, both leaders agreed to resume trade negotiations. President Trump described the conversation as very positive, and announced that trade officials from both countries would meet soon, though specific dates and locations have yet to be determined. In a move to facilitate these talks, the US has temporarily reduced tariffs on Chinese goods from 145% to 30% for a 90-day period. China reciprocated by lowering its tariffs on US goods from 125% to 10%. Despite this progress, significant challenges remain. Disputes over rare earth mineral exports, US restrictions on Chinese technology companies, and limitations on Chinese student visas continue to be points of contention. So now I'm going to talk about some very important dates that you need to have on your calendar over this next month, because this is sure to move the market in June. Something that already happened was yesterday on Friday, the unemployment rate was pretty flat and we had steady job growth. With numbers like that, that pretty much solidifies that we're not going to see a Fed rate cut in June, but maybe in the near future. On Wednesday, June 11th, we have the Consumer Price Index, or CPI. The US Department of Labor will publish the May CPI data. On June 12th, Thursday, we have the Producer Price Index. The PPI report for May will be released, offering a view of wholesale inflation. This data helps assess cost pressures in the production pipeline. On Tuesday, June 17th, we'll have retail sales data. The U.S. Census Bureau will report May retail sales figures indicating consumer spending trends, a key driver of economic growth. We also have some central bank meetings. On June 12th, which is that Thursday, the ECB will hold its monetary policy meeting where decisions on interest rates and economic outlook will be announced. On June 18th, which is a Wednesday, the Federal Reserve interest rate decision will come out. Investors will analyze the Fed's stance on interest rates and economic projections. Like I said before, I don't expect any changes to happen to our rate here in June, and neither do most experts, as we can see on the CME Group FedWatch tool. For June, it looks like almost 100% certainty that the Fed rate will remain the same. For July, and definitely for September, it does look like a rate slash is expected, but we'll see. I expect that at the end of June, there's going to be an emotional and rocky market. I think people are going to be worried about that 90-day pause on the tariffs coming due at the beginning of July, and so by the end of June, people are going to be making some emotional decisions. I think there's going to be a lot of people that start taking profits, especially because we have seen the market start rising again. Especially yesterday on Friday, the market kind of rose out of nowhere, especially with a rocky market on that Thursday. So if it continues to rise all of next week, I expect people to start really taking some of those profits by the middle to end of June, which is going to make the stock market drop, and there will be some dip buying opportunities for those of you that are long-term investors. As always, I'll keep you guys up to date on these Saturday news roundups each week so that you can stay well informed and that you can be a better investor. Watch either of these two videos to keep you going strong in your investing journey, and remember to keep investing simplified.